Sam, I have to say, doesn't it feel like a remote chance, a really, really small probability that they wouldn't cut at all?
I think that would be minuscule, in my opinion. Yeah, it is the fifth time since March. And so if they don't cut, I think investors will be very disappointed. But actually, with the revised employment numbers yesterday, I think that gives additional reason that the Fed will at least cut by 25 basis points.
And that gave more reason for this equity market to rally. Equal weight at all-time highs, small cap outperformings. What do you think equity leadership of the last few days tells you about the attitude of investors towards taking risk appetite more broadly, Sam?
I think in general that risk is on, that they are feeling more comfortable about being back into equities, because now we're looking at the 155 sub-industries in the S&P 1500 trading above their 50-day, 200-day, and both exceeding long-term averages and much higher than we were only a couple of weeks ago. So I think that investors are basically tiptoeing out onto the ice and saying, feels safe to me.
Is tiptoeing out into the ice the same thing as getting complacent again, Sam?
Good question, Danny. I think that what we will find is that wanting is more motivating than having, because once the Fed does start to cut interest rates, the market pretty much treads water. It's the sectors, it's the subsurface performance that tends to do very well, and it typically is the interest-sensitive groups that are outperformers, like real estate, like communication services, which was the old telecom, going back to the mid-90s, and then also utilities.